Let's talk about the new income tax rules that come into effect at the start of the new financial year. There's quite a bit that is changing, and it's interesting because, in a sense, the government is acknowledging that a lot of costs have actually gone up over the course of the last several years, and it's changing certain calculations that should affect how your salary is computed. Let's talk about this in more detail. We've got Amarpal Chadha, who's a tax partner at EY India, joining us. Amarpal, thanks so much for taking the time, and pleasure speaking with you on Your Money Matters. First, for those, and quite a few of my viewers are not tax experts, they're not savvy. They don't understand the technical details. So let's make this tax for dummies. You can help us understand what these new tax rules are all about, please.
Sure. See, one needs to understand that in addition to the concept of new tax regime and the old tax regime, there are also certain benefits which are taxed as perquisites. And perquisites are benefits which are provided in kind by the employer. For example, a car that is provided for under a lease mechanism, any car provided by the employer otherwise, meals provided in office, a gift provided by the employer, education reimbursement or an education benefit provided by the employer, medical benefits, house rent allowance, all of these are benefits in addition to the cash salary that is given. So when we hear about the announcement of tax slabs and tax rates, that applies on the taxable salary, but the benefits that are provided, they need to be valued basis certain rules and principles. And the income tax rules, which are the draft income tax rules for the Income Tax Act 2025, which have now been notified for public comments, they provide the multiple changes that are being brought in. In fact, what is happening is that these are being aligned with the reality on the financial side, basically taking care of the inflation. A lot of these benefits have been provided with higher limits. Some of them actually increase your tax liability. For example, a car perquisite, which was taxed earlier at 1800 rupees per month, will now be taxed at 1500 for at 5000, from 1800 to 5000. The benefit which was for a larger car, which was at 2400, is going up to 7000 rupees. The benefit for a driver, which was taxed at 900, is now going up to 3000 rupees. So some of these benefits actually become more expensive from a perquisite value perspective. But there are certain additional benefits that come your way. For example, the allowance for a meal, which was only 50 rupees a meal, is now being extended to 200 rupees a meal. The benefit for medical loan, which was earlier capped at 20,000, is being now increased to 2 lakh rupees. So there are a lot of these benefits that have been extended. So one would need to look at all these limits that are changing while you do your income tax computations for this year.
Okay, Amarpal, I've actually met a lot of people and asked them just out of curiosity whether they understand how their salary is constructed, and whether you look at the pay slip and you really understand what is basic pay, what are your allowances, what is special allowance, what is your HRA component. So if you were to just look at a regular, and I know that it can differ company to company, but broadly you will have some overarching subheads. Can you describe how these work from the top down?
Sure. Let's take a very simple example. Let's say somebody's CTC, the cost to company is 100. Typical industry standard 40%, 35 to 40% or 45% would be basic salary, like what you said. So out of the 100, let's say 40% or 40 goes into your basic salary. Typically, 50% of the basic salary could go up to 60 also in some cases is HRA or a lease or a company accommodation. So out of the 140 is basic salary, assume 50% of basic goes into HRA. That makes it 60. Out of this now, what is left is 40 out of the 100. Some portion of this will go into retirals, which will be the employer contribution as well as the employee contribution. For simplicity purposes, let's assume another 20 goes off. So 40 plus 20 plus 20. So 80 out of 100 is consumed. What is now left is balance 20, which could be in form of benefits like a company car lease that is provided to an employee, could be an education benefit, could be a leave travel assistance, also could be any other benefit that the employer provides, could be meal coupons, could be that. So their typical structure would be 40% basic, or another 50% of that as your HRA, and the balance being spread over retirals and other benefits.
Okay, that's well put. And how do bonuses get accounted for in the total?
See, typically the industry standard is that variable pay, the bonus, is kept outside the fixed pay. So your percentages could be starting from, depending on industry, a 5% to 50%. But these are kept over and above the fixed component of salary. These are always in addition to the fixed pay.
So it's so just to drive home this point, is it outside of the CTC or is it included in CTC?
So this is over and above the
CTC.
CTC. The CTC is defined in a simple manner as a fixed pay.
Sure. Okay, that makes sense. So all of what we've been speaking about essentially come outside of the ambit of the basic pay and retirals, right? Retirals are effectively your contribution either to the NPS through your organization or the Employee Provident Fund, which you've described as that 20% of the total, yeah, right? Just for simplicity's sake. So we're effectively talking about 40% of the total CTC, which gets affected by a large part of these new income tax rules. You mentioned HRA, Amarpal, and can you take us through why this is significant? Because a lot of rents in a lot of parts of the country have actually gone up quite substantially. How is this calculated, first of all, and what has been announced?
See, two parts. One, at the prima facie, one needs to know that HRA benefit was only available under the earlier tax regime. So if you are under the new tax regime, you don't take HRA benefit. There is no additional advantage. So anyway, a large population is out. But people who want to be and continue in the old tax regime, earlier if they were in metros, there was a limit that 50% of the salary could be exempt only for metro cities. What these rules now do, they add 4 new cities into this list. So now a Bangalore, Ahmedabad, they've been added, Hyderabad, they've been added to this list. So we have more cities that have become part of the relaxation. Even Pune is part of the discussion now. So 4 more cities have been added to the list of 50%. But you need to remember that this is not available under the new tax regime.
Okay. Now, you described the other things, and this is an important qualification because a lot of people actually have that confusion. A lot of people tried to get their deductions beyond a certain point, Amarpal, and these are the people that are relatively savvy, but it's difficult to do now. Would you say that most people are realizing that the new tax regime is actually more beneficial unless you're able to use that Section 24, for example, which is a chunky number, and a substantial portion in HRA, plus maybe an ATC, plus ATCCD, plus a couple of others? Is it difficult to get that value?
You're absolutely right. More and more people are automatically following in the new tax regime, given the slab benefits that's so hugely different than the earlier tax regime. And also, I am seeing this personally, a lot of younger generation just love the new tax regime because of its simplicity. And even if they are saving a couple of bucks here or there, they will simply pick up the new tax regime. And the truth be said, the new tax regime, tax rates are so attractive that people just are moving towards it.
Yeah, fair point. Now, just to drive home that point then, considering that most people are gravitating to the new tax regime, Amarpal, in what you've described and the perquisites, etc., will that change the way that calculations are made at the salary level from the start of the new financial year, in your opinion?
Yes, so all companies would have to bring in these new rules because they change the limits and the threshold. This will impact each and every company in their payroll calculations that they do. So it is definitely work to be done by every company to incorporate these new rules and changes into their ERPs and systems. This will need to be done.
So, but what are the likely implications of that? Because correct me if I'm wrong, the desire from the government is also to push the basic to slightly higher, right? Unless I'm mistaken, please correct me if I'm wrong. I thought the intention was to bring it to half of CTC. Am I wrong? And if these perquisites are going up, does that mean that basic would necessarily have to reduce to a little bit, to a little extent?
No, so you're right. The intent is obviously, and I think you're referring more to the labor codes,
Sure,
because
yeah.
the intent is to define wages in a manner that at least 50% of the salary sits into wages, and that is what is being suggested by all the new labor laws. This, what it does is only provides the taxation limits changing.
Okay.
So I don't see this impacting too much of the base salary discussion, but definitely in some cases the tax liability will go up because of the perk value, but in many cases it will come down because of the enhancements of the limits that have happened.
Fantastic. Okay, so all told, you'll have to discuss it with your company ahead of the start of the new financial year. Make sure you do that. And as always, Amarpal, thanks so much for joining in and for explaining this to us. I think I understood. I'm pretty sure that my viewers did.
Thank you very much, and great. I think you did a great job. Thank you.
Thank you, sir. All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.